Welcome back, everyone, to the Risk Intel podcast, powered by SRA Watchtower, where we share risk intelligence with experts from across the banking industry. I'm your host, Ed Vincent, CEO at SRA Watchtower. Hello, welcome to today's episode of the Risk Intel podcast. I am very excited to have back on the program with me today Beth Nilles, who leads the implementations of risk and control self-assessment module within Watchtower at SRA Watchtower. Beth, thanks for coming back and joining us on the program.
No, I'm happy to be here, Ed.
Now, Beth, this is not your first rodeo. You have implemented a few RCSA tools in your day, both as a practitioner, if you will, inside of a financial institution, but more recently now as someone who is a guru or in the software and helping other financial institutions use it. So I'd love today to explore a little bit about what are those best practices around implementing a new RCSA process or tool, right? Regardless of what that tool or process is, I imagine there are principles or concepts that people should be thinking about, whether it is just getting out of the starting gate or someone that's really sophisticated and trying to take it to that next level. So let's jump in. When you think about implementing a new RCSA process or tool, what are the key features that a financial institution should look for in a tool that supports their RCSA methodology?
I think it should allow for comprehensive risk identification. I think it should allow for a thorough assessment of controls. It should have the ability to effectively prioritize those risks and controls. It should have really good reporting. It should allow easy stakeholder engagement. So you want to make it as easy as possible for your staff to use it because they already have enough to do. And you have to be able to track your mitigation or test it. So it doesn't have to have a full-blown auditing function, but you should have the ability to go in and evaluate how well your controls are working. So having a test function in there. And it shouldn't be too hard to change because environments, everyone watching this knows banks merge and things change. So you need to be able to adjust the structure according to how your bank is changing. So it should be easy to modify.
I'm going to go back through a number of things on that list, but that last one rings true because in our last conversation about calculation methodologies within an RCSA program, you talked about how that needs to be iterative and you need to revisit it and you need to evolve it. And so that same concept applies here, right? That having a tool set that is flexible, that is able to change in a dynamic market, certainly in an M&A world where we anticipate we're going to see more of that, right? Given the current regulatory or the upcoming regulatory environment, that feels like that's really key. So a number of different things that you mentioned in there struck me. Another one was this idea of stakeholder engagement. When you talk about stakeholder engagement, that's probably twofold, I would imagine, because you've got certainly the second line folks that are ultimately going to receive this information, but you've got the first line folks who, if you don't get information from them in the first place, there's nothing to evaluate and measure. And so that stakeholder engagement, it is first line and second line. Is that fair?
That is very fair. Very fair. And it should work for both areas, right? So your RCSA audit teams are always going to want what audit teams want, right? It's going to be what's best for them. But you also have to have things that are the best for your first line. So if they can talk and integrate, that'd be great. But they have to be able to work for both.
Yeah, we had we had a conversation, might have been with Nikki White in a previous episode, about risk being, the land of no historically, as opposed to, right, how do I get to yes?
Yeah,
And so
yeah.
at that, right, what I can think, what just came to mind that if you can use this in a way to help get to yes, and then that really is value add to that first line. And so this is not a chore, this is not an arduous, administrative task. It is, how do I use this in a way that I am sharing information that is going to help me to get to that yes answer? Then that's adding value to the first line. It is
Very
not
much
an
so.
administrative burden.
Yeah, very well said, Ed.
Sometimes it takes a little time, Beth, but the dots finally get connected here. All right, let's talk a bit about the use of technology to streamline our RCSA processes. So you've got a set of calculations really that underpin the concept of RCSAs. Why is that important to have that in a tool rather than on a scratch pad, or perhaps in an Excel document or an Excel file that can be manipulated?
There are so many reasons why. Excel, first of all, Excel sheets get lost, they get broken, they get corrupted. The IT department might have one, the operations department might have another, deposit ops might have one thing, retail ops might have something different. Consistency is my point. You get a central, consistent view of all of your risks and all of your controls. And here's the really cool part. Controls usually exist in more than one iteration across an organization, but they're essentially the same thing. So you want a tool that's going to allow you to see that and really hone in on what's the risk. Fraud is a risk. Fraud is a risk across your organization. How can you see that in disparate spreadsheets? A system will allow you to do that.
So you want a system where if you've got a search and control that is used to mitigate multiple different risks, you want that individual control to be able to relate to risk A, B, and risk C.
And on the other side, if you have a risk that's persistent across your organization, you'll be able to see that very easily.
Right. You mentioned fraud there before. That's one that I know I've heard you talk about when we've talked to financial institutions, is that doesn't sit in one part of the credit union or one part of the bank only. It can sit in multiple places.
Exactly. And in all fairness, Watchtower allows you to track controls either as an individual item, or if you have a control that can vary depending on where it lives, it can do that too. And that's a fairly unique feature.
All right, we're getting into this here a little bit. This question of how an institution can improve the accuracy or efficiency of their RCSA calculations, and it feels like you are advocating pretty strongly here for a piece of technology as a key way to achieve that.
It was life-changing for me when I could start tracking my gaps in my controls in something other than a spreadsheet, and being able to see them all and see the whole institution's library of controls. So it is a very useful tool if you look at it as that and not a burden.
Right. So you really can drive both, operational efficiency, but also accuracy and robustness of outcomes there, which ultimately is going to allow you to make a risk-informed decision. But if you don't have that visibility, or the data is not accurate, right, you're making a decision based upon kind of false inputs. You talked earlier about an audit function versus a first line risk or individual that is applying a control. What should an RCSA tool set integrate with?
It should integrate with your enterprise risk management platform. It should integrate with your audit platform if possible. I'm sure there's other things.
Because as you say that, right, the other thought that comes to mind is really making sure that that data is feeding back into, if you have a central data warehouse or a data mart, right? We were talking about that in a separate discussion earlier today around, the importance of a hub of data, with then multiple spokes going out from that, and those different spokes are really different use cases. And so whether that is your spoke going out to your audit system, or or out to the first line, but ensuring that all that data itself, ideally bidirectionally, but it's getting back into that central hub.
I 100% agree, because I was just sitting here thinking, we've got your transaction monitoring, you've got your RCSA, you've got your IT function. All of these have data that affect and influence risk. So the ability to be able to see them all, or pull them all, or use them all in a central location is huge.
Right. Well, I'm going to take that to the next use case that comes to mind for me, which is, all right, you've got all this information in one place. You've got these tools that are integrated, so it's flowing, one direction or bidirectionally. Ultimately, then you have one use case, which is to that first line person who is going to enact that control, or potentially change a process based upon the risks that they see. There's another use case, and you alluded to it earlier, about how it changed your life of being aware of the gaps. What about the use case of management consuming this information and reporting, and how do you think about that in terms of order of importance, right? You talked earlier about an inventory of controls and easy stakeholder engagement and test function. You mentioned reporting as one of the things on that list. So can you talk a little bit about, right, what that reporting use case looks like?
I actually think that using these tools for management, and it closes silos, it knocks them down, because there's insight now into areas in a deep way that they didn't have before. I mean, when you do reporting through your line of command, you talk about where you are and where you might have gaps, but it's not documented and memorialized anywhere other than maybe in a committee report or a board report, and then it's fleeting and it's gone. If you have all this data in the systems, it's available to everybody, and all the silos are gone. So you understand all that, and it allows your enterprise risk management area to pull all of this, and then thereby your management team to know where they've got to focus resources and what they have to do to improve to help with the strategic goal at the end. Because if you have a gap in an operational area and you're not really paying any attention to it, you can say that you have a strategy that is going to just fail on that pillar.
You're not really getting a true holistic picture at that enterprise level if you don't have this input into that
Exactly.
view. Yes, and right, we talk about a holistic platform. This feels like this is absolutely crucial, and you can pull in your financial data, and you can look at your your cyber reports and your fraud and your BSA outcomes, and this feels like it is as important, if not the most important thing on that list, because this is really what's happening inside the organization on a day-to-day basis.
I think it puts the top more closely in relation and understanding to the bottom. So it fills it all in and connects it.
Yeah. Beth, thank you. We've covered a lot of ground here. Is there anything you think we've missed on any other best practices around implementing an RCSA process or tool?
No, sometimes I wish I could go back in time and relive some of my banking days with tools like this. It would have made life so much easier.
You said it, I noted it down. I think it was life-changing was the phrase which you mentioned. And so I hope that what this does is it gives folks the impetus to take a look at a tool, to consider, right, how can I, one, make my life easier, but you know, but also really add value to the institution as well by capturing this information, and empowering your first line with intelligence to help them do their jobs, right? To get them to the land of yes, and then put them in a position to grow and mature and evolve over time, right? That iterative, flexible nature of this is really key as well. So hopefully this is inspirational to some folks out there, and I certainly would encourage anyone that is thinking about this to reach your direction. I'm sure you'd be willing to talk more about it with anyone.
Absolutely.
Thanks, Beth. Appreciate the time.